In this video, we're going to go over the top 5 data center stocks. And let me know what you guys are up to this evening. Hopefully, you're having a great afternoon. We have seen some recent earnings come out from some top data center companies. And I want to know how you guys are doing. What is the top um, ticker symbols that you have right now that you'd like us to cover? Let me know in the chat what's going on. You got Lunar and Redwire. Those are some interesting ones as they've recently signed some contracts. So thanks for sharing that, Elvis. What's going on, Superborn 612? Where are you tuning in from? And what are your favorite ticker symbols you'd like us to look at? I don't know that we'll get to all of them, but I will write them down here so we have them for the future. How is everybody doing this afternoon? Is everybody doing well? So we're going to pull up our data center watch list and we're going to jump right into it. What's up, Dylan? What's going on, Elvis? London, Ontario. Wow, amazing. Where's everybody tuning in from? I would love to see it. We just went live and we are just starting up a live session. I think that the live interaction oftentimes is great because as an investor, if you have any questions while we're analyzing the stock, you can always drop them in the chat and then we get to it super quickly and promptly. And that's very helpful. So I see you all tuned in. Fremont, California. Nice. That's pretty close to where I live. But I'm in Argentina right now visiting family, but I'll be back near between Auburn and Lake Tahoe, in that kind of area. That's where I'm from. Awesome. You got SoFi from Paul Henry. Okay. So we're live. You guys can hear me and see me okay? Everything's good to go. Cool. So I don't know if you guys know, but we like to read books. And there's this book called Think and Grow Rich. And it's about a state of mind, having a definiteness of purpose and a burning desire. So let me ask you, if you knew where the next trillion-dollar infrastructure wave was being built, would you position yourself or would you watch it pass by? Because while most people chase the obvious, AI chips, flashy headlines, hype stocks, there's a silent foundation beneath it all. And that is the data centers. It's a digital gold mine right now, powering the AI revolution. And today, I'm going to reveal the top 5 data center stocks every serious investor should have on their radar. But before I do, remember this. Wealth doesn't come to the curious, it comes from decisiveness. So pay close attention, realize there's no agenda here. These aren't just stocks or hype stocks, they're more pillars of a new economy. And there's no agenda here to make you buy or sell or to persuade you in any way. We're simply here to do the analysis, get you the facts you need so you can understand the company in the best way possible and get the insights that will help you make a better and faster decision. So let's jump into it. The chat is awesome. Superborn, Lake Tahoe. Yep, that's where I'm from. NYC. Oh, cool. Love to see it. We have quite an audience over there. So first things first, let's stretch this out. We did a presentation earlier, so I want to make sure this holds. There we go. Okay, so in the data center watch list, our first stock we're going to go over here is going to be IREN, IREN. And we've been going over the stock for a while. We've been looking for a recovery up into $80 a share. And we recently saw them hit that $80 price point today as they surged up to 80 bucks and then continued back down, selling down to about $67. And so they have this very consistent uptrend. And there's 3 things we look at when we're identifying a stock. The first thing we look at is the market. So as you know, the data center market has been growing very fast. Every single tech company has been saying they're investing more in data centers. And if you look at the market size right now, it says 347 billion in 2024. projected to 650 billion by 2030. We're already past all of those projections on the data center market. And so the first step is looking at the market. And so that would kind of show IREN here in the data center market. And there's two pieces we look at in the market. The first piece is going to be the actual attention and the cash coming in and the revenues coming in. And we see a lot more revenues coming in to the data center market as of recently. How many of you guys have seen like this just very strong desire from almost every tech company to build data centers? Anybody? Has anybody else seen that? It's like this massive thing, right? When it comes to the market, they've seen a lot more growth. This company is in AI infrastructure. They're working towards owning and operating end-to-end control. And this is really important. It's the same reason why in our analysis here, so we were just doing a demo earlier today with this analysis here, and we were doing some analysis with Claude or with OpenAI. We like to run our own models because we also don't want to give out our company proprietary information to those models. IREN helps companies run their own AI cloud or their own AI setup. They can do either AI cloud, so tap into the data centers through the cloud, or they can do co-location, meaning that they have their own setup inside of one of their data centers, or they could build to suit, meaning your strategic data center partner, and they build a data center with you or for you. And so that's been the focus with this company. So they've been continuing to develop pretty aggressively in that market. So the second piece of the market analysis is going to be the real world usage. The real world usage is really important because you could have a lot of cash, a lot of money coming into the data center market, but do you actually have real world usage? That's kind of the question. And what they've seen is recent partnerships. There's some companies that when they partner with NVIDIA, they see way more growth. It's how you find Tesla stock at an early age, or how I was able to find it early, or NVIDIA early, was because I see that NVIDIA was powering, Apple and Tesla back at like 2018, 2019. Finding the companies that are powering the big companies will give you a lot of growth opportunities. So basically, if you're wondering, okay, NVIDIA is the biggest company in the world, let's kind of reverse engineer what companies are powering NVIDIA. And one of the companies here is IREN. And so that brings us into kind of the news, the financials. You see them working with NVIDIA, see them working with Supermicro Computer, Dell Technologies, and some others. They got many different locations for data centers, and it seems to be working for them. What we saw, so the financial side of things is where we get into the analysis stage number 2, which is going to be IREN, the financials here. They just came out with their earnings and they kind of sold off. Most data center companies did sell off recently. They fell post earnings about 12%. Their revenue, though, increased by 28%, and they secured a $9.7 billion deal with Microsoft. So when we look at the financials of this stock here, let's see, IREN, there we go. You can see that it's $18 billion in market cap. They just signed a $9 billion deal, and they're ramping up their revenue extremely fast. Elvis says, do you think you could take a look at Lunar and Redwire? 100%, Elvis. We're going to start it off here with the data center companies. And so in the financial side of things, you see their revenue increase quarter over quarter, up from what was this time last year, around 55 million, and they jumped to 180 million in June. And then in their recent earnings that they just came out with, they jumped revenue again, another 25-30% there. So revenue's been increasing over 200% year over year. The net income right now is about 450% up with a positive net income, meaning they're making money every quarter, not losing it. And then their balance sheet is at $2.9 billion according to their last earnings. But again, they just reported their earnings. So in their recent earnings that they came out with today, they reported that Q1 loss. So revenue was up to $240 million, and their loss came in at a loss per share of about 34 cents versus the 14-cent estimate. Actually flipping some things. The stock performance has been up, and we see them up to all-time highs, but you're seeing the financial impact is that while their revenue has been up, their market cap is exceeding up to $18 billion, which is pretty fast given that, yes, they signed a $9.6 billion deal with Microsoft about 3 days ago, but they're still, even with that deal, who knows, let's say that it's over the course of a couple years, it's getting paid out kind of slow. And ultimately, that data center company, IREN, could see some near-term volatility. And you do see the pressure where they've sold down from about $76 a share down to $66 a share. And so with this trend, we're looking at a rising support level that's around $60 a share. And they're looking to continue their overall uptrend up into this level of around $85 a share. They can continue this overall momentum. Now, when we're looking at IREN stock from so that's a technical perspective. Again, they got a support level at $60 a share, and they're looking to bounce. They have a previous resistance level at around $60 a share that they're recently bouncing, and they're up to 68, looking to recover back and continue up into that $80 range. And then from the fundamental perspective and the financial perspective, they're a little bit above fair value, but that's not accounting for the fact that they just signed that big $10 billion deal with Microsoft. Once that hits their balance sheet, they're going to see a lot of growth, most likely. It's just kind of waiting for that to hit their balance sheet until they see their revenue increase on the balance sheet or on the income statement. So that's where they are currently. So I personally would see this company as a long-term growth opportunity in the data center market. We could see them start to build out more of their data center into 2,409 acres. And there has been manipulation in the markets for sure. There's a comment there from Tomar saying hard manipulation of throwing weak hands or a real downtrend. In my eyes, I see that there has been no greater time in history for us to be a part of what is this revolutionary new development of value. AI is a real thing. It's a really real thing right now. It's actually becoming so valuable. People are using it to sign contracts and act as a lawyer. People are using it to find different diseases that they otherwise wouldn't be able to find, or run diagnostic that they otherwise wouldn't be able to find. AI is allowing us to solve bigger problems at scale, and it's even allowing us to do better analysis. We were just doing some AI analysis on the stock, and I was pulling up Rigetti or IREN in this case, and we can actually take a look at the AI analysis. Let's take a look at the projections here. I was doing some crazy widget adding earlier, so you see those. Let's see if this works. Let's do IREN and get an AI analysis of the stock. As you can see right now, when we're looking at the analysis of this company, you have a few things to watch. You got the future chart, so we could take a look here from the Grok analysis, and then you're going to have an outlook on the reasoning behind that projection. Now, AI is doing this for us. If there was a time where we ever thought of technology that would be the most advanced, it would be something like this, AI. And we're using it right here. You can see there's a projection, a little bit of downward pressure on IREN. And then into the next 3 months to the next month, things are looking fairly bullish. As you can see, the next 3 months looks bullish for IREN. It's looking about a 10% gain according to the AI, and a 6-month gain of over 15% according to the AI. And this is just a taste of some of the technology. This is what our team has been able to build. There will be a world where AI will do a lot of the things that we do on a daily basis, and this company's building that. So that is the main projection is bullish. We're looking at a bullish target for IREN. And then we could get into the next company. So the next company, number 2, is going to be WULF stock, WULF. We've been looking at a very similar trend, and we're going to jump into the 3-part analysis for this one. And you can see in Grinch Warfare says CIFR got a deal with Google for $3 billion and AWS for $5.5 billion. If there was one beautiful thing about our community that I always find is surprising, how you as an investor tuned in are able to share your knowledge here and help everyone else that's tuned in. And when I see comments from people in our community and they say that there has been a deal that has been released, or there has been a company that has a new product that's just hit the market, it's an amazing time that we're able to see that info. So thank you so much for commenting. Thank you for sharing that information, because again, I'll use that information 100%, and we'll go ahead and do some more research into that. So thank you so much, Grinch Warfare. Appreciate it. SMP is in APLD stock, which is one of our top data center companies. And he got in at about 804 APLD at $8 a share, which is a really nice time. And you got in as soon as you heard that NVIDIA was investing in it. And that's the thing about this data center market, is it's powering NVIDIA, it's powering Microsoft. If you're looking at the underlying technology that makes it possible for these big companies to operate, it's going to be the data center, this data center market, right? And so that's exactly right. In 10 years, you're looking at Teslas even at this price. Got it. Hold on to these stocks. I love that. I love that. Yeah, I mean, a lot of them are long-term holds. In the short term, there is some volatility. When you look at WULF, this is a stock that has been primarily on a 5 to 6x over the last few months. It was just at around $2 a share entering into April. Then we saw it really start to rocket up into August and into September. And it's been continuing this very consistent uptrend into about $17 a share before pulling back down into 14 bucks a share. And when you're looking at WULF, TerraWolf, the financials look more favorable than other companies that we've seen in this market. I mean, if we're being real about what the market cap is, 5.86 billion. That's not a small amount. And then you want to look to see that they're backing it up. And you look at the revenues, they're around 34 million, 35 million, and 47 million a quarter, and net income still negative. The other company, IREN, that we were just going over when we were looking at that revenue sheet, we saw that IREN, for example, and I can kind of cross-reference them side by side if you guys are okay with that. Is that cool? Can I do a cross-reference here? So on the right side, you got WULF, and on the left side, you got IREN. You could see that their market caps, if you go to the top, you kind of see their market caps. And I should probably do this on Mercatus. I would love to do this on our own application, so it's a little easier on the eyes. This is pretty bright, so hopefully it's not too bright for you guys. But the market cap on the left for IREN is 18 billion. And then the market cap on the right for WULF is 5.8 billion. When you go down to the financials, so keep those numbers in mind. Again, 18 billion on IREN and 5.8 billion on WULF stock. When you go down and you look at the income statements, the revenue in this last quarter from IREN, not including what just came out today, which actually was more revenue, was $180 million in their last quarter. And then the revenue that came out for WULF stock was 47 million. So WULF stock considerably, they're about 1/3 the size of IREN, and they came in with about 1/3 the revenue of IREN. And so the revenues, then you got to look at the balance sheet and say, what are their assets like? So IREN has about one or a little bit less than, or yeah, 1.8 billion in equity, and WULF stock has about 174 million in equity. So, from a perspective of which company is going to prevail and see more growth over the future, simply put, IREN has seen more interest from big tech, and they've raised way more money proportionally to WULF at their current market caps. And currently, IREN would be much more favorable to continue explosive growth than WULF stock, because WULF stock doesn't have that much equity and is at higher risk to be in trouble if they have any money that they owe. So that's why I like IREN a little bit better. But when we're looking at WULF stock from their company's contribution, I think they recently had a partnership with Google, who bought a large share of their company. And let's actually pull up, well, IREN is very bullish over the next 6 months. WLF is going to be a little bit different, I would imagine. But we can pull up the top transactors and see what the analysis looks like. What we could see right now is insiders are finding that, according to the Grok overview and summary, so an AI analysis of all of the buys and sells that are taking place, there has been a little bit more sells than buys. And then according to the institutions, there's also been more sells than buys, or actually more buys than sells. So TeraWulf, on an institutional perspective, has had some confidence. On an insider basis, they've seen some sell-offs. So TeraWulf, they have similar projections than IREN, and their chart also looks pretty similar, as they recently pulled back to about $3 a share. WULF stock is in a position right now where they're looking to recover back up into that $17 price point, and that's the next target, which is about a 25% increase if they continue their overall trend. But again, the financials are not as strong as IREN, and so they got some things working against them. And I could see here that my camera's not working, and that's totally okay. It's just part of the setup today. So WULF stock is now seeing that their risk is a little bit lower. They have this rising support level up into about $13.50 a share, and they've recently pulled back to about $14 a share, and they've been having this downward momentum. If you can see this recent trend, they've been correcting kind of back down and looking to sell off, holding below this EMA, this blue line, potentially getting rejected, looking to sell back down into that $13.50 range. Now, if they sell back down into this level, they're still going to be looking for a support level and continuing this overall uptrend that they've been holding so consistently to get back up into that $16 to $17 range. But as of right now, a little bit of downward pressure. I like the company's market, and I think the risk to reward right now, it's kind of at an all-time high. And so I would be more patient before entering any positions, even though the RSI and the MACD indicate a buy right now. It looks like there's still some indication that the company's seen some downward pressure. And this correction that we're seeing in the market might not last just for one day. It could actually last for a couple days or a couple of weeks potentially, especially with some downward pressure from the government shutdown. So then you got the next stock. That's WULF stock. I like the company long term, but again, a little bit on the overbought side and kind of getting down into this level. And maybe it's a bottom, but it does have some downward pressure. But getting into the next company, it's going to be APLD. So APLD is one of the top companies we've been following for a while. We've been looking for this recovery, kind of continuing up into this level of around $39 to $40 a share, which is the all-time high that they reached recently. I don't know, is it actually an all-time high? Yeah, an all-time high. And so they were just at $3 a share back in April. And the market of data centers and AI has grown so significantly over the last 6 months. They've actually gone from $3 a share up to $40 a share by middle of October and pulled back. So the APLD market, we got a lot of people here that are looking at APLD. S&P had some buys at $8. I personally am a holder of APLD, and we're up a little bit over 100% on that position. But we haven't really had any large positions in APLD that have been sustained for long periods of time. We've kind of traded the stock more often. And so as we see them pull back down into these levels, you're now looking at a downward pressure. They were holding very nicely above this 200-day moving average. We can hide the drawings for a minute. And they were holding above this 200-day moving average very consistently. The technical analysis, just looking at that recent kind of consolidation, and then they kind of crossed below that 200-day moving average, and now it's been acting as a resistance, which is kind of indicating more bearish momentum. But it's been in that phase for about a month now, and we're looking for them to still continue a trend similar to this, which is about a 20 to 30% increase if they continue their overall uptrend. I know there's a lot of lines here, but that's kind of the consensus. We had a support level mapped out around $29. They did bounce APLD stock. Now, we know the market's growing, but what are the financials like for APLD? APLD stock has had a market cap of about $8.69 billion, and their quarterly revenues are still around $64 million. They just reported earnings recently. Their revenues increased up to $64 million, and their net income narrowed, which was good, but they're still not seeing positive net income. And because of that, it kind of asks a question. All right, they're at a $8.6 billion market cap. Would it make sense that they continue up if they're only making $64 million in revenue and their balance sheet is at an equity standpoint of around $1 billion, $1.1 billion? And the reality is, if you're looking at the balance sheet and the income statement currently, the answer is no. Right now, they're overvalued. But if you're looking at APLD from a longer term perspective, investing into AI infrastructure for the future, and you're saying this is a market that we're seeing build infrastructure for what is going to be the biggest generational movement in technology, and you take an extra step and you say, what are their recent deals that most likely will show up onto their balance sheet? It's going to be most likely not a no. It's going to be a yes. This company still would be undervalued at $8 billion market cap. Why is that? Well, with an $8 billion market cap, and they're kind of seeing the revenues increase year over year, but still not really pulling it out on the income statement, they've had this massive influx of recent contracts. So they've had some AI hyperscalers reach out to them and start to build relationships with APLD in multi-billion dollar fashion. So they've had basically $7 billion initially from a CoreWeave deal, which is an AI company. And then shortly after that, when CoreWeave was still getting their feet in the AI space, they signed a $7 billion deal. But shortly after that, they increased that investment by $4 billion, which brought that total deal up to about $11 billion in Applied Digital's deal with CoreWeave. So you can see that this was the recent article that came out. Initially, it was $7 billion in revenue. And then you can see that the total anticipated contracted lease revenue increased for CoreWeave, and APLD is expected to make about $11 billion. So given that they have $11 billion in pipeline there, and they just signed another $5 billion, I believe, here, that puts them in a position to make about $16 billion over the next few years. And that puts their current market cap of $8 billion actually looking very undervalued. And so when we're looking at their approach to the market, what most people don't realize is that there's only so much infrastructure that can be built in certain places. And this company basically said, rather than try and build in these congested areas of Phoenix where it's really hot, might not be efficient, or Austin, Texas, where you do have flooding or occasionally very hot summers. They went to North Dakota, which is one of the coldest places in the US, to build their data centers, and they've done it in a fashion of focusing on renewable energy sources and partnering with top companies that are doing billions of dollars a quarter. They got Supermicro Computer, Nvidia is one of their top investors and partners, Dell, and Intel. And so APLD's had some really nice projections as of recently. And I would love to see this projection here from what we have for the machine. If you guys ever want to learn how to invest using this machine, we're still in the beta test and you can get the all-time best deal for this. It's an AI analysis software and you can use it often. You can use it every single day. You can select your best AI model that we have available, your favorite ones, OpenAI, Grok, or Claude. And then you can search any one of your favorite stocks and it will do the analysis for you. And here it's giving us some projections based on the same analysis that we all already do. You'll notice that there's certain things that progress a lot. And one of the things is automating the way that we do our analysis. I do analysis quite often, and I've come to this realization that while it's good to go through the motions, technology can automate a lot of what I already do. And so I actually have automated my investing process. We plug in the best data sources that we're already looking at, like verifiable press releases, financials, data sources like SEC filings, but primarily some of the data that's otherwise not considered by these AI models that makes our AI models real time. And it does the analysis for you. And I don't know if you could see my screen or how this will look when I stretch this out, but if I move this very small, you'll notice we also recently added the mobile version for this. I don't know if you can see the mobile version and how it looks, but it's pretty amazing. And we're adding a lot of really cool things for using different AIs that are supercharged with our analysis. And if you'd like to get access to the beta before it changes in price, it's going to be the first link in the description down below. So we also wanted to take a look here at the top transactors for APLD. APLD stock has had institutional ownership that's pretty high, which does mean it could have some manipulation. And while it's at $8 billion, it also could mean that there's a lot more institutions that are buying because they see something that most people don't. And so with the current analysis, we kind of get an analysis here. Let's see if we can get the Grok analysis. So the other thing we do is we actually summarize things. So AI is summarizing this, and it's, if you haven't seen this before, it's basically telling us all the buys and sells and what that means for the company. And so as you can see here, with the exception of a little bit of finicking, Vanguard Group is an acquirer. We see more buys there. Overall, less institutional buying as of recently than sells. There's been more sells. On the institutional side, that's how it looks. And then on the insider side, let's get the AI analysis. Let's see if that works up, if we can get it to function. There we go. Insider transactions, also a little bit more bearish. So what is that telling us? Are we going to see more of a sell-off down to out of this overall uptrend, maybe even sell back down into these levels around $25 or $26 a share before continuing up? It's possible. With the overall uptrends that we're seeing with the data center market, anything could happen, and we could see the extended market sell-off down into those $24, $25 ranges. And so you got to be ready for that if you're a short-term investor. If you're a long-term investor, that's not really something that bothers you, especially if you entered earlier and you're probably looking at this as an opportunity to buy more when it pulls back, if you're looking at the top data center companies in the view that AI is going to continue to grow over the next 5 years. So APLD, again, one of our top ones, we got a support level right here around $29 a share. We're looking for an overall uptrend. I would expect them continue up, but again, they could always sell back down to that $25 price point. I wouldn't worry about it either way, as I'm a long-term holder in them, but we also have some shorter term trades that if they present themselves at market open, we oftentimes trade. If you ever want to tune into the daily live trading sessions, it's the second link in the description below. We'll be there tomorrow morning at market open. And we even have a data center boom sale there. If you'd like to tune in, get a free t-shirt as well. So we got a full analysis on IREN. We got an analysis on APLD and WULF stock. And next, I'd just like to take a moment to go over BITF. So BITF stock is a company that has been primarily focused on the data center build outs for AI, but previously they focused on building Bitcoin mining centers, and they've converted them to AI centers. And so now they're starting to make their way into the data center market, and they've had a very consistent uptrend. We know that their market is growing very fast. And then when we look at their data centers they've recently built, they've deployed many data centers in North America and in South America. And so they have a portfolio of data centers with primarily a focus on energy sources that are going to power those data centers very efficiently. One of the greatest challenges of our generation is going to be energy. And so, data centers is one thing. We also cover quantum computing, and we cover, the energy sectors like nuclear, or some of the innovations happening in space tech that impact those industries. But overall, the portfolio for this company is actually really impressive. They have a ton of data centers. When we're looking at the recent news that's come out for the company, they have some earnings coming out next week, and some say that their earnings will be negative. But when you're looking at, that's kind of a hype article from NASDAQ. I love that NASDAQ brings value in certain ways, but they have a lot of hype as well. Carl says, mobile Mercatus is a huge improvement. Thank you, Will. Yeah, of course. Hey, I always say, I'm trying to make Mercatus for myself too. It's not selfish in any way, but I will tell you, there was a part of me that was saying like, man, I want to be able to analyze stocks, look at the best models, and even when we add the quantum that we're adding for the quantum analysis, I want to be able to do that from my phone. So we recently added the mobile side of things, and it's a big milestone and a lot more value for all of our beta testers in the machine. And so if there's one thing that I would say about the machine, it's that where it's going right now, I think will really surprise people, because everything that we do is based around the fact that AI will be getting better. Everything that we do is every time there's a new advancement in AI, it directly impacts the results that our investors get. And so I'm really excited about that. I'm really excited about it. And the goals that we have for that are very, very well measured. And the progress that we're making, is so exciting. And just the progress of building it has been the most satisfying thing. We've had certain milestones that we've hit, and we've had even outside investor interest, not actually in using the product, but investing in the product. And there's been certain things where people have asked me to build them certain things for their own investment, private setups. And it's made me think that we're really building something awesome that's going to be for retail. And so I'm glad that you're enjoying it. I'm glad you're enjoying it. So revenue, $77 million in revenue in the last quarter in BITF. What does that mean for them? They have a market cap right now of about 2.9 billion Canadian. So they're still pretty small as a data center company. We know that they're only about $4 a share, or $3.69 a share. Just because something is a low price doesn't necessarily mean it's a good deal, but you do see their revenues really increasing quarter over quarter, and they are seeing that net income narrow a little bit. The revenues are up 87% year over year, and if you look at the overall growth, they've seen increases. So obviously their pivot from Bitcoin mining to providing infrastructure for AI has been profitable. Then you look at their balance sheet, and they've also got a lot of discipline happening. It was just 2020 that they only had, I don't know, $15 million in equity. And now in 2024, in that report, they had $610 million in equity. And then as of 2025, they have about $662 million in equity. So their total assets have been growing quite a bit, about 55% year over year, or 76% year over year, while their liabilities on average have gone down, which is good because liabilities going up would be kind of the opposite of what you want to see. So everything about this company, BITF, has been increasing on the financial side. And then with the data center demand increasing, they've seen their stock have some runs from $1 a share back in August to about $6.60 here by October. The recent sell down since October over the last 15, 20 days has really caused some downward pressure, and they've crossed below that 200-day moving average. And now they're back down to this overall support, rising support. And even though I might be looking at a bullish recovery on this stock, there's still a lot of indication that the trend is down. You can see this bearish trend. You got a decreasing lower resistance, lower highs, and that's been since the high. And then you have this level, kind of lower lows, where it's downtrending. So while we're looking at this near-term recovery here, maybe over the next day or 2 days, with potential to recover up into about $4 a share, which would be a 10% recovery, they're still not breaking out of that. You see that green line, that 200-day moving average kind of acting as resistance. They really got to break up above $4 a share for them to start to become, full reversal. And then once you get above that level, then you see the next targets around $5 a share. We're up to about $6 or even $7 a share, which is about 65% increase. So right now we're kind of watching that $10 or 10%, excuse me, 10% potential recovery. And they got a support level here around $3.50 for BITF. But overall uptrend, and they've recently pulled back. And I think that if there's anything we're looking at here, there's probably less risk than reward, just looking at the overall trend. And given that the demand for data centers has increased, I think they're going to reach back up into that $4 to $5 or $6 range. Just kind of looking at the financials alone, but looking at the chart as well, it looks like it's having an uptrend. Could it revisit the lows of $2.50, says CN? It's a really good question. I think if you're looking at the $2.50 range, that's down here in this previous resistance or previous support. I think the first level that is the strongest level for them to watch is right around 350. 350 is this previous resistance they saw back in September, and then they had a support level in October, and then into mid-October there was a support level, and that went all the way until now with a few touch points at that $3.50 range. And that's over the previous resistance. Now, if they can't hold the 350 range that we're talking about here, that we're anticipating the bounce, then we're probably looking at something that would sell down to around like 250 or somewhere in here. Yeah, that level, I see that level you're looking at. It's possible that it does go that conservative. But I think in the data center market, there's enough sentiment to carry them. You just have to be careful, because if you're not committed in a short-term investment, you haven't made a prompt decision about how you plan to manage that position, then it would be really stressful to buy, because there is, as we mentioned, that downtrend as of recently in the overall uptrend. And so you want to have a plan in the short term. You want to have a stop loss that is much smaller than that of the amount of profit you're going for, so you can afford to lose. And then, of course, if you're in the long term, you're buying the dips, you're looking to add to your position for the long term. So that was number 4. And we got to go over quite a few data center companies. I appreciate all of the outlooks from you guys. Luis sold some Big Bear today, hoping to pick back up around 490 average. You were at 730. Hope you didn't make a mistake, Luis says. Yeah, Luis, I appreciate the outlook. I guess my question would be, if you're planning to get back in around 490, what made you think that you know that it's going to continue all the way down to 490? That would be my question. Because oftentimes when things are in the red is when you're looking at the best opportunities to buy. And I know that that sounds weird if you're like hearing that for the first time, or maybe you've heard that. I'm sure you've heard that, Luis. Um, and Luis, we've been on that. We've been going back and forth on email recently, so um, we've been talking today. Um, I think that the number one thing you got to think about if you're going to sell is you're basically becoming a short-term trader when you do that. Like if you're going to do that, it's totally fine. But if you plan to get back into it later, then why would you sell? That's the question. And so let's get into number 5. Number 5 is going to be TSSI. TSSI is in the data center market that's a little bit different than most data center markets we just covered. Most of the companies that we just went over specifically focus on the data center construction or the actual data center ownership themselves. But when we're looking at TSSI, TSSI focuses on the solutions to power the data centers, including the infrastructure, the rack integration, the cabling, and the actual programming and setup of data centers and moving of data centers from different facilities to other facilities. They also specialize in the AI builds, liquid cooling, disaster recovery, and configuration services. And so I like this company because I think that they're in a market that's actually extremely hard to replicate, because every person will succeed to the extent of the value they create. And a measure of value is going to be the degree of difficulty involved in replacing you. And it's not a very easy skill for any company like Apple or Microsoft to spin up. I'm sure they have people, young people coming in from college and what have you, of course, but learning how to really program data centers and configure them and connect them, and also know that the electrician side of doing that and building the computer systems, or even moving the computer systems, which is something they specialize in, is a pretty hard skill, and it's not very easily replaceable. And so TSSI has been on an overall uptrend. We're seeing them start to find a support around $15 a share. They've been bouncing on this 200-day moving average, this green line. You can see them when they're bullish, they're holding above this EMA. They're looking quite bullish. When they're bearish, they're going to be pushing below. They've been holding above the overall 200-day moving average, that green line, and they recently sold back down and kind of have been consolidating from left to right from September into November. And so now that they've sold back down to about $15 a share, they bounced up to $16 a share, and they're looking to continue back up into these levels. And so if they're going to find a support here, it's kind of the nearest previous resistance around $20 a share. You had a support level in July, and then a resistance level in October, and a resistance level in November. And they also have a resistance and a support here. And now you can get a better look at the potential recovery that we're looking at here. If they're going to continue their overall uptrend, they're looking at a recovery like this. It's about a 25% potential recovery on TSSI. They can hold that level, get back up in that $20 range. the AI market's been growing fast, and the overall trend, if they could continue it, would actually be even more bullish than that. Be something like not 25%, but actually up here about 100%, back up into this $30 range, continuing this overall uptrend. And so for TSSI, they've also had some really favorable financials. Their current market cap's at 400 million, so very small. In fact, they move very fast. They might be up 120% over the last 6 months, but they can move down just as fast, 11%. And you can see the volatility here. And so what we've seen with this company is that they've had pretty good revenues quarter over quarter, and they have a positive net income. Not a lot, but it's positive. And so only $400 million in market cap and 440 million. And their revenues are actually around 150 million in 2024 and increasing. You can see the hockey stick. And then in 2025, they're already on track to do $300 million. They're on track to do $300 million in revenue, up 260% year over year on revenue. Their balance sheet doesn't have a lot of equity. They do have high liabilities, which makes sense. Most construction or technical companies oftentimes do, but they're still positive in their assets to liabilities. But what I like is that they're bringing in $300 million a year here, and that their market cap is at 440 million, and they're in the data center market. So I think the company has some potential. The news has looked pretty good for them. They haven't seen any major deals as of recently, but they do have a lot of contracts, obviously, as they have their revenue. And then the overall uptrend is what we're watching for continual recovery into that $21 range. It's about a 30% increase to $30 range, which is about a 100% increase, with the support level at $15 to watch closely. So those are kind of the details. We do see them sell down recently, and now at this moment, the RSI and the MACD are looking more like a buy. You see them sell back down in this consolidation, and the overall uptrend would indicate that they would potentially bounce here, and the upside seems to be pretty big compared to that risk. If you're in a shorter term trade, the support level is favorable, and you'd want to see maybe a little more validation, but as a shorter term trade, it looks fairly good. In a longer term trade, yeah, I like the company's overall growth. So it seems like they're on the right track. What do you guys think? Awesome. Louis says, if you had $5,000 to invest in one of the companies that you're currently long in thousands, what stock would you favor the most? I wouldn't favor any one stock because I've just always diversified quite often. So I always do kind of that 5% rule. So I'll invest like 5% in this stock, 5% in that stock. And as you guys hear me a lot, I'm always like, we have long-term positions in this company, we have long-term positions in this company, and we have a lot of different long-term positions. And I don't invest in the S&P 500. I've been able to get better returns by investing in, tech companies and data center companies, even some oil and gas tech, robotics, even quantum stocks and space tech. And I just invest in the future. I've personally had really great experiences in the markets by spreading it out. So I don't take any one big bet on any one stock. And so there's a really good formula called the Holy Grail formula by Ray Dalio for stock investing. I would encourage you to have a look at it, as he basically says, for every diversification you add, there is a diminishing return to at some point, but there is a level of increase in your probability of profit up until a certain point. And I think, if I'm not mistaken, it's like once you diversify like less than 5% in each stock, then there's diminishing return. And I found it really interesting at a young age. There's a great book. It's called The Principles by Ray Dalio. So I'd encourage you to take a look at it. But yeah, that's basically the whole principle. And that's how I do it. Yes, of course, Johnny. Johnny says, "Are you going to cover nuclear stocks soon?" Yeah, I would love to cover some nuclear stocks, and the energy market of nuclear has been growing really fast, and it's powering data centers, it's powering the AI markets, and I would imagine it's going to be a really great market in about 5 to 10 years from now. So when it comes to the nuclear market, you do see larger investments from uh, Facebook, Microsoft, Sam Altman. You have Zuckerberg investing more into the nuclear technology that's going to power a lot of um, the energy demand for AI. So there's a lot of dynamic companies to watch right now. We just went over the top 5 to review. We went over IREN, we went over WULF, went over APLD, BITF, and TSSI. So those are the top 5 data center companies. Appreciate you all. If I earned your thumbs up, smash the like button. I'll take a screenshot of the companies you guys mentioned here in the chat that are other companies, and I appreciate you all. If you'd like to join us in our daily live trading sessions, as always, you can tune on in. We have our daily live trading sessions Monday through Friday inside of StockMate. We have 29 millionaires. We recently got another millionaire that we tracked at least. I think we might have more, but what I've been able to track is I do call each member 29 millionaires inside of StockMate, and we have our live trading happening tomorrow morning at market open, 10 hours from now. There's also some beginners and intermediate investors. You get this community, you get, I think it's about 65 lessons of how to do technical fundamental analysis in stocks, crypto options, how to invest in AI, quantum, data centers, space tech, and even nuclear, as we mentioned. But the main thing is the live sessions. So you get daily live trading sessions. You get targets for the week with exciting earnings on which companies are reporting, what the targets are for those companies that I release each week. And then you also can always send me a message if you have any questions there as well. So appreciate you all again. It's the second link below. The best deal if you want to get StockMate for free and everything I just mentioned for free as a bonus, then you can unlock beta access to the machine for AI analysis. And that's a 1-year license for complete access to speed up your analysis. And that's in the first link in the description where you get StockMate as a bonus. So again, appreciate you all. Hope I earned your thumbs up again at the like button. Do consider subscribing, and I'll see you guys in the next video. Take care.